Hello, everyone. This is Tom Fox. I'd like to welcome you to a special 5-part podcast series, Integrity Matters, a K2 Integrity podcast. This podcast series is business and financial fraud, yesterday, today, and tomorrow. For this series, I'm joined by Joanne Taylor, a managing director at K2 Integrity. Joanne has 20 years of legal investigations and financial crime compliance experience, which includes fraud risk management, anti-bribery and corruption, regulatory enforcement, and fraud investigations experience working within the financial and legal services industries. I'm also joined by Ray Dukey. Ray is a managing director of K2 Integrity's investigation and risk advisory practice. He has more than 25 years' experience in compliance, integrity risk monitoring and management, and investigations. His experience spans across industries with specific focus on financial services, life sciences, as well as real estate and construction. Over the next 5 episodes, we will take a look at the top fraud trends to expect in 2021, the regulatory landscape in 2021 and misconduct, best practices in fraud prevention, how to detect fraud, and responding to fraud once uncovered. In this 5th and final episode of our 5-part series, I'm joined by Ray Dukey, where we take up the topic of how do you respond to fraud once it's detected. This 5-part K2 Integrity podcast is a special production of the Compliance Podcast Network. Hello, everyone. This is Tom Fox, back for our 5th and final episode in the K2 Integrity podcast series on business and financial fraud. I am joined again today by Ray Dukey, and we're going to take up responding to fraud once it's uncovered. Ray, so first of all, thank you for taking the time to visit with me.
Great to be here again. Always appreciate it.
You know, we've talked about fraud prevention, fraud detection, and that leaves us with the response, or if we looked at it in the 3-pronged approach to a compliance program, prevent, detect, and remediate. What do you see as some of the key elements in a fraud response plan, Ray?
So great question, Tom. I think in the past few years, we've seen a renewed focus by the regulators on compliance program effectiveness. And one of the key elements of program effectiveness is how well an organization identify, investigates, and remediate potential compliance issues, right? And so I think this is the concept of self-governance, right? And I think if an organization governs itself really well, the regulators would tend to leave them alone, right? And let them continue down their path. And so some of the key elements that the regulators have stated that they're looking at when assessing if an organization is self-governing is how well they're identifying and then investigating and remediating their potential, and then lastly, disclosing those compliance issues, right? So it's not just about, oh, we do a really good job, but actually reaching out to regulators and saying, hey, we had some issues here, but just so you know, we had our program is so good that we identified it and we did a thorough and complete and impartial investigation, and guess what? We terminated the individual or individuals that were involved, and so no need to look here, regulators. And we're coming to you and telling you about this, right? So just no need to look here. We're good. And so I think those are sort of the key elements, I would say, of a well-oiled fraud response plan.
Ray, one of the things that the Department of Justice talks about in terms of a compliance program is having an investigation protocol, but also doing a root cause analysis if there's a failure. I was wondering if you could speak really to both and tell us a little bit more about what you would suggest for an investigation protocol, and then perhaps if you could contrast that with a root cause analysis.
Absolutely. I think last year the SEC had a record-breaking year with respect to their whistleblower program, both in terms of the number of calls that they received and also the number of money, the value of monies that they paid out to individuals that reported issues. I think after an SEC call, it's game over, right? It's too late. And so organizations need to demonstrate not just to the regulators, but to their employees within the organization, that their compliance department is really the place to come to if they have potential concerns, right? And in order to do that, they need to not only just communicate that they have a hotline, but really let the employees understand that they have confidence that the compliance organization and team will address the concerns raised in a timely, in a thorough, and that they would apply sort of fair resolution or fair justice or equal sort of a remediation, despite a person being an executive or a frontline employee. I think that expression of confidence in the workers and the employees of an organization, I think potentially is an element that would prevent someone from going out to the regulators and reporting the issue and then allowing the company to do its internal investigation and self-reporting. So I think that in itself is sort of a key aspect of this. I think this concept of the root cause analysis, it's a great concept because if and when you're going to the regulators, you don't want to be in a position to say, oh, we've got all these issues, right? You got to be able to say that we had all of these issues and we have now fixed them, right? And the way you know how to fix them is by doing that root cause analysis. What went wrong? How did it actually go wrong? Was it a policy issue? Was it an internal control issue? Was it a lack of understanding of the responsibility on behalf of the employee? But did we hire the wrong person, right? Did we hire someone with questionable backgrounds and brought them into our organization? I think that means it has implications on the hiring and screening protocols. It has implications on what financial controls and how effective you really think they were, right? And so I think all of these understanding the root cause problems when compliance officers are sitting across the table from regulators say, here's exactly what happened, how it happened, when it happened, and here's how we're going to fix it going forward. And I think that to me is a key concept there, that root cause analysis, key concept in identifying and correcting issues in the organization. And that also lends to confidence in the individuals who are reporting the issues to know that, hey, these guys take it seriously, right? And they're doing the right thing. I think that to me is a key sort of concept of a well effective compliance program.
Ray, in a prior life, I was a trial lawyer, and I largely defended um, chemical and petrochemical companies in the Texas Gulf Coast from personal injury claims. And in every incident where someone was injured, there was a root cause analysis. It was done by both the plant and union members. And it was beat into their heads to report facts, don't assess blame.
Right.
And the blame could be assessed at a higher level or someone could interpret it, but the line guys, they reported facts. And when I would take that to a jury, it was an incredibly powerful tool because it was just that, reporting facts. And at that point in America, facts didn't lie. And at least to the juries, it didn't. And is that the same type of approach you would suggest to report facts? If an interpretation is needed, others can perform that interpretation?
Absolutely. So in drafting our investigative reports at K2, we tend to report on just the facts. Very rarely do we provide opinions. There are a few exceptions in expert opinion type cases where you would do that, but for the most part, it's an investigative report is just that. What happened? When did it happen? How did it happen? And our best guesses at how it happened, right? In some cases, we never get to that final conclusion. But I think that's truly what the underlying, basics of an investigation is. It's to report those things that are factual and supported, right, by corroborating evidence, whether it's financial records or witness interviews. I think those are all sort of key elements that you would expect to see in an investigation protocol, Tom. It's not just about how to report and where to report to. It's also about how to actually conduct the investigation and the root cause analysis. I think another element of an investigation protocol is what's called this sort of a triage process. And I think, when you think about triage, you're thinking about in the medical space, but I think also in the fraud space, we need to be able to triage fraud issues or compliance issues as they're coming in the door, right? Same concept as in an ER room, trying to identify what's wrong with the individual in the medical space. In this concept, is what's the issue here? What are the underlying compliance issues? What are the underlying fraud issues? And who to best deal with this issue? Which specialist or which, compliance expert should be dealing with this type of issue? Is it an HR issue? Is it a financial reporting fraud issue? Is it an AML CFT, compliance issue? I think having that sort of assessment or triage at the outset helps to then bring in the right experts, bring in the right lawyers or forensic accountants. I'm here if anyone needs me. Self, promoting. But bringing in those individuals into the fold to make sure that, again, addressing the issue at hand and then appropriately investigating and reporting on that matter.
I'd now like to turn to some protocols you might suggest for both remediation and disclosure, and maybe take remediation first because I have some additional questions around disclosures.
Absolutely. So remediation is a concept that, again, demonstrating program effectiveness. You want to be able to say that we have fixed the problem, right? And that's one aspect of it. A second aspect of it is sort of applying the fair and equal penalties or sanctions against those individuals that committed the fraud or the misconduct, right? And that, in cases in the past, you've seen sort of when the executives commit fraud, it's sort of a little slap on the wrist, right? And however, when an employee commits fraud, they're terminated immediately, right? And so what a remediation protocol does is it helps organizations, and it's within it. It's sometimes it's not housed within the compliance department. It's actually housed within HR, right? And HR is sitting at the table with compliance to help, remediate and apply sort of equal justice, against the fraud or misconduct. And it oftentimes when it involves senior people, it rises to the level of board involvement, right? So you would have, board members or the head of the compliance committee on the board sitting at the table with HR and compliance and audit and others to say, okay, how do we ensure that the organization is protected and we apply, a fair remediation to the issue at hand? So I think those are some concepts around remediation.
In many ways, this can be either one of the most difficult conversations or hardest conversations that someone like you actually might have with a board or other trusted advisors, because it may mean a decision that could cost a company a lot of money in terms of legal expenses to deal with a government or a regulator, but it also might be not simply the right thing to do from a reputational standpoint, but the right thing to do legally because you'll get credit for it. So I was wondering how you help decision makers really think through the decision to disclose or not to disclose, because that can also be a valid response.
Yeah, absolutely. And it stems from the investigation, right? I think, and the findings and how well the company had, what's the extent of the exposure. I think those are key sort of concepts. So as part of any investigation, we would help our clients identify the magnitude of the problem, and how widespread the problem is for an organization, right? And then there's the aspect of the regulatory implications or potential violations. Those are some things that we would help the client sort of understand. I think from a disclose or not disclose perspective, I think, we want to make sure that counsel is involved, and sometimes it's very, it's not investigative counsel, it's specialty counsel that just deals with disclosure to government, and brokering, for lack of a better term. It's a bad term, but brokering sort of that that discussion with the government. And so what a disclosure protocol would entail, Tom, is just encapsulating all the things that we just talked about. Not exactly, what to disclose, but more so the protocols for disclosing, meaning that we want to make sure it's a thorough and complete investigation, that we understand, the magnitude of the problem, right? We want to make sure that the right people are sitting at the table to apply the fair and equal justice, right? We want to make sure that also, when and if it's time to disclose, we also have the right people sitting at the table to make that decision. So I think those are the things that I would envision that would be in a disclosure protocol. Not so much the nuts and bolts of what, and it's more how to disclose, right? I think is the concept of a disclosure protocol.
Ray, unfortunately, we're near the end of our time for not only this episode, but this series. It's been a fascinating exploration of business and financial fraud circa February 2021. And I was wondering if you had any final words or thoughts that you might want to leave our audience with.
No, I think I do. I think, given the change in sort of the regulatory landscape and the changes in potential regulations, there may be added exposure for compliance or officers and organizations. I think those individuals need to, dust off the anti-fraud program, dust off the compliance program, do a risk assessment, understand the gaps in their potential controls, where areas where they may not be as strong. Think about whether or not you need to enhance the compliance regulations around, whether it's AML, CFT. You need to provide more training to individuals, and then lastly, do you need to do a self audit, right? Or audit readiness assessment ahead of a potential regulatory visit. I think those are some, key aspects of what I would recommend to organizations, that they start with the risk assessment and then take it from there.
Ray, if anyone wanted to find out any more information on that, where is the K2 website?
Yeah, absolutely. K2integrity.com. We're also on Twitter and a number of other, web platforms. Look us up. We're here to help.
We're going to link to that in the show notes because it's a fabulous resource for a wide variety of issues. This has been a great series, and frankly, I look forward to continuing the conversation, Ray.
Absolutely. Thank you, Tom.
This is Tom Fox again. I'd like to thank you for listening to this episode of a K2 Integrity podcast, Business and Financial Fraud, Yesterday, Today, and Tomorrow. Check out the resources available on the K2 Integrity website, which is listed in today's show notes. This special 5-part podcast series is a production of the Compliance Podcast Network. Thanks so much for joining us.